I'm buying the dip on Coinbase stock extremely heavily, and in this video I want to give you guys my bull case on coin stock and when I think the price will actually start to recover. In this video I want to share some short-term and long-term catalysts for Bitcoin and cryptocurrencies in general to understand how this stock could be the best beta version of cryptocurrencies on the Nasdaq exchange. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So the first thing I want to address real quick is how is Bitcoin faring in this macroeconomic situation? We all know that Bitcoin has declined very significantly from its highs of $70,000. And there's absolutely no way to sugarcoat this, but Coinbase stock's performance is going to directly correlate with the price of Bitcoin. The only reason the stock has been underperforming is because Bitcoin and cryptocurrencies have been in a bear market since the fall of last year. And as you can see right now, we're coming down to this very oversold level right around the 2018 peak of Bitcoin at around 20K. And so this is leading us to answer the question whether or not this is the bottom or is there more downside to potentially this $13,000 level, which would obviously mean more pain ahead for Coinbase stock. Well, as you can see, the data shows us that this is something we have gone through multiple times in the past 10 years. Bitcoin has obviously been around since 2009, but Bitcoin's up and down cycles have happened well over 8 times, and Coinbase as a company has survived through every single one of them. As you can see, typically the trend is that after we see a massive exhaustion of buyers, crypto tends to pull back right around to the previous high that it tends to have made. And as you can see, that also tended to coincide with some short-term catalysts back in 2015 with the launch of Ethereum, which skyrocketed crypto prices for the next 5 years and entered them into a bull market. And what this leads us to is an average drawdown from peak to trough of around 391 to 364 days, with an average maximum drawdown of around 84% to 73%. And as you can see right now, as of July of 2022, Bitcoin has drawn down to around 72%, which is obviously right in the middle of that range, barring obviously any macroeconomic events which could lead Bitcoin down even lower. In my opinion, this is not the bottom of Bitcoin because there's absolutely no way to predict that it is. All I'm saying is that the risk to reward as an investor in the cryptocurrency space right now is very attractive if you have the appetite to take on some of the short-term sideways action or short-term pain. But obviously, that is what every great investor has to go through, and it's going to be no difference of a case this time with Bitcoin and Coinbase stock. Longer-term Bitcoin investors are extremely familiar with some of the massive fear-mongering we tend to see during these phases when crypto is going down. But the great part is that they're also very familiar with all the euphoria that tends to happen during these bull phases of crypto when everybody is talking about it at the dinner table and then everybody wants to now own Bitcoin and invest in cryptos. But the reality is that the time to talk about crypto is during these bear markets, because the people that invest here are the ones that everybody's talking about at the dinner table in the first place about how they made millions of dollars and increased their wealth by investing in crypto. And although in the short term there's a lot of news articles out there showing how crypto is a scam and that even Coinbase as a company is failing, the reality is that none of this is going to last in the long term, because in the short term the media's job is to simply report to you what's going on right now, not what's going to be happening in the future. And I can guarantee you that one of the biggest reasons for Coinbase stock's underperformance is the fact that it is the only publicly listed crypto exchange in the US markets. Binance and FTX are not publicly traded, but the reality is those companies' valuations have also come down significantly. It's just that Coinbase is getting most of the heat for this because they happen to be publicly traded. And I think that is actually creating a good opportunity for us investors, because it means that we might be getting a significantly more discounted stock price than if Coinbase was completely private and there were no media articles about this company. And for me at least, it's extremely ignorant to completely dismiss the fact that Coinbase is sitting on around $6 billion worth of cash and is trading at a price of sales of only 2.7. Yes, in the short term, their EPS and sales are going to go down, but I think that is no surprise because obviously Bitcoin is down. But if you're a long-term believer in crypto, then Coinbase stock right now is potentially a very attractive deal because of the overreaction that the market could be performing right now because of all the fear-mongering and capitulation. And guess what? All the stuff I just talked about is more of the longer-term perspective for Coinbase stock and Bitcoin. But the reality is that in the short term, within the next 6 months, we have some pretty major catalysts that could determine and mark a short-term bottom that could leave us with some nice relaxation in the Coinbase stock price, kind of like what we saw happen back in July when Coinbase partnered with Blackrock. As you can see, the first catalyst here is upcoming on September 14th, which is when Ethereum is going to be doing its very infamous merge, which is essentially it's shifting from a proof of work standpoint to a proof of stake standpoint. As you can see, this is how the technicals of this are going to work. Although I'm not a smart person when it comes to blockchain and I'm not extremely familiar with every single term they use, this is essentially going to increase the security of the Ethereum blockchain and also increase its energy efficiency, meaning mining the coin is going to become much cheaper and allow more renewables and more stakeholders to work with this specific kind of token. And if you pair that with the fact that more clarity on crypto regulation could be just around the corner within the next 12 to 24 months, it creates a pretty nice risk to reward opportunity for anybody who's looking to be a contrarian investor in this time of panic. And to be honest, I think Brian Armstrong does a great job of explaining these longer term and medium term regulation catalysts, which is exactly what we're going to listen to right now.
No, I think that we get our fair share of attention. You know, we're the largest in the U.S. and we do get a lot of attention from the SEC, but they're giving attention to everybody. So I don't think that that's unfair. I guess just zooming out, you know, we've been actively engaging with regulators, and I actually think it's a good thing. Sometimes it's reported as it's a bad thing, but I actually don't. You know, we send petitions and information to regulators. They send us inquiries. We meet with various people every week at the company, and our overall goal is really to help drive regulatory clarity on a global scale. I tweeted out something about this recently, showing a breakdown of every G20 country. Our policy team is meeting with most of those countries, and sort of where we're seeing, you know, no regulation, pending regulation, and clear regulation for crypto. And it's just compared to 2 years ago, it's like night and day. There's basically pending legislation or active clear legislation for crypto in almost every G20 across major categories now. So I think this is really good, and it's not widely known, is that like even here in the US, I think we'll see probably a comprehensive crypto bill, hopefully passed next year. And what that'll mean is just with that clarity emerging, there'll be a lot more institutional money flowing into crypto.
And it's safe to say that Brian is not lying. As you can see, there's been a lot of progress been made in the cryptocurrency regulations across all the major countries in the world, which means that over the next 5 years, as we start getting some more legislation, at least in the US, we should start seeing positive inflows from institutional investors into cryptocurrencies, which will obviously benefit Coinbase because they are the largest US exchange for crypto. And as of right now, at least, most of the innovation in the crypto space is indeed being done in the United States. And finally, it would be criminal to not even mention the fact that SEC recently delayed VanEck's Bitcoin spot ETF application to October 11th, which means that we have another catalyst in the fall, which could potentially act as one of the bottoming indicators for Coinbase or Bitcoin if the macroeconomic situation also tends to develop. And with brokerages like Voyager and Celsius having gone bankrupt in this crypto bear market, there's less competition for Coinbase in this market, at least in the US. And with obviously most of the other exchanges being international, Coinbase, in my opinion, is setting up for a nice trajectory for recovery over the next 5 years. But as usual, guys, let me know your thoughts down in the comment section below, and I'll catch you guys in the next one. Take care.